Hi, everyone, and welcome again to the Jason and Peely Project. I have a phenomenal guest, but before I get into that, I'm actually taping at this live event called PodMax. It's from my friends Eric Cabral and Josh Perry and their entire team. These amazing people have put together this conference that happens basically every quarter. I think even more than that. But so check PodMax out. It's www.podmax.com. And they are phenomenal. So back to the show. I want to introduce to you Fred Moskowitz. Fred is a note investor, entrepreneur, and public speaker who has trained countless investors from all walks of life on how to create passive income streams of their own. As a fund manager, Fred manages a mortgage note investment fund and is considered an industry veteran within the note investing arena. Fred is an advocate for spreading awareness about self-directed investing and enjoys teaching investors how to accelerate their financial growth using self-directed investment vehicles such as self-directed IRAs and self-directed HSAs. I am so lucky and so honored to have you on, Fred. Welcome to the show.
Thank you, Peely. It's my pleasure. Thank you for having me today.
So so there are so many avenues of real estate that an investor can get into. So many. Why did you pick notes?
For a number of reasons. Note investing is really digging into the finance side of real estate transactions. And as you know, as real estate investors, the financing is such a huge component of any real estate transaction. And if you think about it, this business, this industry, it dates back to biblical times, right? The whole industry of lending and debt. And banks have figured this out long ago that they would rather lend money and own liens on properties rather than own properties, right? They figured that out long ago, and it's allowed them to scale massively. And we can get into that. But the things that really drew me into note investing is that you're able to buy notes at a discount to the amount owed. So with real estate investors always are seeking to buy properties at a discount for less than market value. Well, with note investing, that's pretty standard. Notes are sold every day. They're bought and sold on the secondary market, and they're sold at a discount. And what happens with that is that when a note is bought at a discount, it increases the rate of return higher than the interest rate on the note. So you can really drive high rates of return that way. And the other point is that the ability to scale, right? With note investing, it's very easy to scale very large portfolios of loans, and with the strategic partners of having note servicing companies, it allows you to scale massively. It's very possible to start out with a couple of notes, maybe 10, then grow to 10 or 20 notes. But then if you want to scale beyond that to hundreds of notes or thousands of notes, it's very possible, very doable. And we see larger hedge funds and lending institutions routinely do this. Their size is very large and they manage many assets. It's all possible due to the different infrastructure and different vendors that you're able to leverage. I lost your audio, Peely.
There we go. So back to you. Now that we've discussed the why, let's talk about the what. I am a new investor. Say I'm a new investor, or maybe I'm a house flipper looking to get into something else. How would you describe notes to me?
So the way I would describe notes to you is is there's a lot of similarities to owning real estate. If you own property, you have rental properties. So you own the property, you manage it, you have rental income each month, right? Well, if you step into the shoes of the lender, you own the asset, which is the note, right? It's backed by collateral, which is that real estate. So that protects your asset, and you're earning income each month. You're getting a payment each month. Now, one interesting detail is the lender does not have any responsibility for the property itself unless they choose to. But the owner of the property is responsible to maintain the property, keep it in good condition, pay the taxes on it, the insurance, all of those things. The lender just makes sure that's getting done, but they don't have to do any of that, right? So think about it from that perspective where you have another party which is taking care of the collateral for you.
Very nice. So now that we know the what, the why, how would a new investor or investor that wants something, do something else, to put their money somewhere else, to have another pillar of financial freedom, how can they get involved with notes?
Peely, I really love the way you pose that question, because that's exactly right. This should be, for an investor, this should be another pillar in addition to what you're already doing.
This may
Right.
have been a very private question, because I honestly want to know.
Yeah, it's a great question. It's a great question. So, and we'll come back to a thought I had about that. But for someone to get started, there's really three main ways to get involved with note investing. The first way is, and this will be very familiar to real estate investors, is that you own a property. Let's say you owned it for 10 years or something like that. You've built up equity and appreciation, and then you sell the property. You can sell it to another investor who's going to continue operating as a rental, but you can carry owner financing to that investor. So in effect, you're originating the note. Well, what just happened there, right? You stepped into the shoes of the lender. You no longer own the property, and you're still going to be earning cash flow every month on it moving forward. And you don't own it anymore or have the management responsibilities any longer. And this is very common with investor transactions to do this. We see it a lot more with commercial deals, but it's called owner financing or owner carryback loan notes. So that's the first way. The second way is to go out on the secondary market and buy a note that already exists from another investor, right? There's a secondary market. Loans are bought and sold every day out on the secondary market. So you can do that and you can negotiate a discount. And the third way is to invest in a note fund, where a note fund is where a professional owns, manages, and operates that note fund. They raise capital for investors who want to be passive investors. The manager acquires the notes, they find them, they manage them, and then they pay a return out to the investors. It works very much like a real estate syndication, like on an apartment deal. And actually, the legal structure of a fund, of a syndication, and a note fund are very similar, using a 506D offering.
I was thinking that sounded really familiar.
Yeah, it is. And one of the most powerful things that I like to talk about is, if you're going to invest in notes, see if it makes sense for you to do it out of your IRA, out of a self-directed IRA account. And the reason why is because note investing generates a lot of tax liability. All you have is interest income and capital gains, and basically no deductions, no write-offs. So it causes a lot of tax liability for the investor. So if you're able to combine that with the power of a self-directed IRA or self-directed Roth IRA, where you have to basically invest in something passively, right? That ties into a note fund. But you're not going to be subject to these heavy taxes. It's a powerful combination. It really is. And for anyone that's, whether they're a real estate investor or they're busy in their own career as a professional and is looking for a passive investment, that's a great way to go, a great way to get involved. And with note funds, one of the benefits I like is that the investor is able to leverage the expertise, the experience, and the relationships, those business relationships of the fund manager, and benefit from that and be a passive investor. But if a note fund is not something that the investor is interested in, you could certainly buy individual notes and own those in your retirement account as well. It's a really powerful strategy.
So how could investors, for all my investors, and there's a lot of them who are listening to this right now, how could they get involved with notes? Say they're flipping, like I said before, or in large multifamily. So if you're in large multifamily, chances are you already know how syndication works, and you've already had the privilege of providing opportunities to your investors. So how can they include notes into their opportunities that they provide?
The way to include notes, certainly creation of a fund is one way to go. Also, if you have a large multifamily property, when you go to sell it, think about selling it with owner financing. And there's a couple of benefits to that, actually, because it allows you to spread out the capital gain over the term of the note, which may provide some tax advantages there. And let me just say, I'm not giving tax advice. So certainly it's just an idea to consider, an idea for you to bring to your CPA and ask, is this a strategy that may work for my particular situation? Right.
Yes, we should make that disclaimer. Neither of us are
Yeah.
CPAs. We do. Please discuss this with your fiduciary, your CPA, your bankers, your managers. We are just simply giving some hard-earned advice. So go on.
Some ideas, sharing ideas and experiences. That's it. I mean, you work with your professional and talk to them to see if this is a strategy that works for you.
Hey guys, again, thank you so much for taking the time to listen to our show.
And if you love what you see, and I know you do, please rate, review, and subscribe. It would mean so much to us.
Yeah, it absolutely means the world to us, helps us get out to a wider audience, really just capture more people that we can help you with this show. Again, if you're getting value, check us out. Thank you again.
So grateful to you.
Let's talk about that mindset, because I've been right now, like I said before, we're at PodMax, where we're all sharing ideas. And that's one of the greatest things I think about this group is that we share. Tell me about your mindset of sharing and helping and teaching other investors. I mean, you could keep this information to yourself, just lock it away in the vault that's your amazing brain, and keep on making money and not share it with anybody. Or you can do what you're doing. So let's talk about that mindset of giving.
It's all about having an abundance mindset as opposed to a scarcity mindset, right? This is a really powerful concept. A great book I read about this is by Carol Dweck, and it's called Mindset by Carol Dweck, Dweck. Highly recommend that book. But
Great
it talks all about this concept of having a mindset of abundance or of scarcity, and there's no limit. I mean, this is really a powerful way to consider how you conduct yourself, how you show up in the world. It really is. I'll share a little thing with you that I learned when I was first getting started out in real estate investing. I had the great opportunity to learn from a very well-known investor. He was an old-time guy. His name was Jack Miller. I don't know if you've ever heard of him. He was,
Heard his name, yes.
yeah, he's no longer alive, but he was a very well-known educator from Florida, and he would come up to the Philadelphia area where I am and teach weekend classes and workshops, and he would teach all of these powerful strategies about wholesaling real estate and options and notes. And you would attend a full day with him and your mind would be blown.
My mind's already blown. That's like
just
that's
from
like
all the
candy.
information. And I'll never forget, he said this at the end of the day. He said, now I want you to take this information and what you've learned and put it to use. But when you later on, when you achieve success and have a lot of experience under your belt, well, then turn around and teach it to someone else. And I never forgot that, right? And it's so true, because some of the best lessons, the best ideas and strategies that I've learned have been directly from someone else teaching to me. And I'm more than happy to pass that along to someone else.
Well, talking about teaching, it looks like you're coming out with a book. Can you talk a little bit about your book? I believe it's called The Little Green Book of Note Investing.
Yes.
That's exciting.
It is. It's really exciting. It will be coming out in the end of 2020. And the book is going to be all about sharing strategies and techniques for getting involved in note investing, how to analyze notes, how to find them, a lot of the management practices that are used, as well as a healthy dose of leveraging retirement accounts and how to put that together with note investing, the strategy I mentioned earlier. So it's really going to be at a basic level for folks that are just getting started or interested in learning about note investing, about investing in note funds, and combining that with retirement accounts.
I just had a thought, especially for newer investors. I wish I had known about note investing when I was first starting out, because it seems like note investing can give a new investor a better handle on the finances of real estate investing. Like, for instance, I mean, we all know HGTV and all those high glamour shows. A lot of flippers get into flipping because of these shows and find out it's not as it is on TV. It's like note investing to me is not glamorous at all. You're not going to hear about it on HGTV. But the thing is, the best for me now, the best investments are the most boring, are the most like, okay, I have to do this step and this step and this step and this step, and then this is going to end up in my bank account. And I can teach other people how to do it. That's exactly what note investing sounds like to me. And I wish I had known about this when we were first starting out. So any of the new investors out there that are listening to this, Fred, what can you tell them and get them into what I would say is probably one of the smartest investing vehicles right now?
Yeah, definitely. I agree completely with you, Pili. It's not glamorous, not at all, not exciting, but it's very powerful, very powerful. And so let's touch back on an earlier point you made as being one of the pillars in your investing, right? This is not the end all be all. Absolutely not. For me, I'm very involved in the note business. However, I own real estate. Absolutely. There's so many advantages to owning real estate. I own real estate for the rental income and the tax benefits that it provides. I also invest in real estate syndications out of my Roth IRA, of course, and benefit that way. So I'm still involved in many ways. So there's other pillars, other areas of investing, and that helps with your diversification, right? Everyone hears about diversification. You see it on the MSNBC shows and all of that. Well, let me just say that diversification does not mean in your 401k plan at work that you pick between the 6 or so options that are in there. That is not diversification, not at all. You have to look
and you might be going to this, but I want to make sure you hit on it. For my newer investors out there, can you explain exactly what diversification really means? Because there's a lot of investors that think to themselves that exactly what you said, that's diversification. It's not. What exactly is diversification, and how they should diversify?
So for me, diversification means that you are investing in different asset classes that are not correlated to each other. And what will happen is that there's different industry cycles, different business cycles. Some may be doing well at one particular time and others may not. And because you have a balance, they're going to carry your overall financial house and keep it in order. Those pillars will keep everything stable, keep everything together. And yeah, you may have some money in the stock market, and that's great, but you also have some real estate as well, which maybe the real estate goes down in value. But guess what? If the tenant is there, the property is well taken care of and occupied, tenants want to have a place to live. They're happy to pay rent for that, and you have that income coming in. As far as I know, people always prefer to live indoors, right? So there's always a demand for quality housing, right? So that's the real estate component. And then notes, it's the debt side of that as well. People that own properties have mortgages on them. They want to continue to live in the house. They pay those obligations. And so you're able to benefit from that monthly income.
That is completely amazing. I don't know about you guys that are listening, but I am definitely going to give Fred, mine and Jason's information. We're going to have an extended conversation about notes because we are definitely always looking to diversify. And I think notes are the one thing that we don't have in our portfolio right now. So if anybody out there is looking to diversify their portfolio, is looking for more information, or is simply looking for their next venture, how can they contact you?
Yeah, thank you. There's a few ways. The first way is through my website at fredmoskowitz.com. Always happy to connect with other investors and learn about what they're doing and network. And another way is to text the word NOTE, N-O-T-E, to the number 47177 and follow the prompts there. And anyone that signs up through the text messaging application, you'll receive information about the book launch when it's coming out. And also for your listeners, I'd like to offer a special report on note investing that I can send out to anyone that registers there.
Fantastic. Well, you heard it from Fred. You guys need to go there and register and get more information. Like I said, I mean, you all know me and you all listen to me. I'm usually like, wham, bam, do. This is investing at its finest. This is investing at, that's the numbers. It's connected to a property, but it's all about the numbers. So please get a hold of Fred, listen to what he does, and see if they can help you diversify your portfolio and make it stronger. Thank you so much for joining me today, Fred.
Thank you, Peely. It's been my pleasure having a great conversation with you today. It was a lot of fun. Thank you.
So awesome. And thank you to everyone who listened today. If you like what you heard, please rate and review and subscribe. And please go to the links below. Check out Fred. Have a great day. And I'm so grateful. Bye now.
Bye.
Join us for your second cup of coffee every Monday through Friday at noon.
Live every day, bringing us our best content we've done so far. Super excited, super engaging, bunch of great guests. We're here to answer your questions, and we so appreciate you listening. Make sure to check this out.
Can't wait to see you.